The cost of living has risen at its fastest rate for a decade, with inflation at 5.1% last month, according to figures from the Office for National Statistics. Rising transport and energy costs have driven the increase, which is substantially higher than many analysts had been expecting, and more than double the Bank of England's inflation target of 2%. Tomorrow, the bank has to decide whether or not to raise interest rates in response to that new inflation figure. Here's our economics correspondent, Andy Verity.
When Chrissy Jones from Frome was younger in the 1970s, they used to call it stagflation. As the economy slows almost to a stop, the cost of living's rising faster than it has in more than a decade. Goods prices, everything from saucepans to breadboards to cookers, rose by 6.5%, the fastest in 30 years. Electricity bills are up 19%, and on average, bills for gas are up by 28%. When her previous supplier went bust and she switched to British Gas, her bill almost doubled.
We can't plan anything for the future. We probably won't have a holiday this coming year. And we were going to rescue another dog, which we had been planning to do. But I think that's the expense. It wouldn't be fair on the dog, so it wouldn't be fair on our purse.
The gradual reopening of the global economy this year has led to a surge in activity, meaning much higher demand for commodities like petrol. The supply of it hasn't kept up with that demand, forcing up the average price of a litre of unleaded to a record £1.45.8, compared to less than £1.13 a year ago. With manufacturers unable to make as many new cars owing to a shortage of microchips, the cost of second-hand cars has risen by 31% since April, as commuters sought to avoid public transport. On the financial markets, they're now betting that the Bank of England will have to raise the official interest rate from a record low of 0.1%, though maybe not straight away.
Normally, I think that would be a green light to go ahead and raise interest rates now. But we have all this uncertainty around the Omicron variant. We don't know what's going to happen to the economy as a consequence in the next couple of months. And that's why, on balance, we think they'll wait at least till February, assuming that hopefully the worst of the Omicron situation is behind us by then.
There's more upward inflationary pressure in the pipeline. The prices paid by manufacturers for raw materials like metals were up by an average of 14.3%, the fastest rise since 2008. After the worst decade in 2 centuries for improvements in living standards, they are now once again falling.
Well, Andy joins me now here in the studio. So, Andy, a big decision for the Bank of England tomorrow on interest rates.
That's right. And if you remember, we've had emergency low interest rates now for about 13 years. They just started to edge them up before the pandemic, and then they dropped to a record low of 0.1%. But as we were hearing there, it's quite unlikely that they're going to raise them tomorrow. On the markets in the city, they're betting 2-1 against that possibility, because the Bank of England doesn't yet know what effect Omicron has had on the labour market. But the markets are betting that rates will rise in the new year, getting up to about 1 percentage point, so 10 times what they are at the moment, by the end of the year. And there's a limited amount that can do anyway to curb inflation, which is mostly driven by global commodity prices. As I was saying in the report, if you have surging demand from a reopening global economy and supply doesn't keep up, that's why prices rise. The Bank of England's hope is that that is transitory and that supply will catch up and prices will come down. But the key thing to watch is whether or not wages start to take off. If they do, then interest rates might have to rise faster.
Andy, thank you very much. Andy Verity, our economics